Tesla investors, are you all ready to witness Tesla's third stock split? It's literally on the horizon. And honestly, if you guys want to ask me, at the recording of this video, Tesla stock is almost at 450. I think if Tesla doubles from now, there's going to be another stock split. But in this video, we're going to go deep into it. When is Tesla going to do their next stock split? When will Tesla hit pretty much over $1,000 per share? And how will they do it? 3 for 1, 5 for 1, 6 for 1, 10 for 1. How will they do it? So this video has been asked a lot. You guys have been commenting a lot for this video, and I've been curious too, and I've been doing some homework. So I scaled this from now to 2032 to see not just the stock split number 3, but stock split number 4 and number 5 and 6 and onwards. We'll see what the limit is from now to 2032. Get ready, smash that like button, hit subscribe if you haven't already, because we're gonna get down to it. Now, before we actually get down to it, we got to go through the past history of Tesla on how they did the stock splits. You see, the first time Tesla did their first stock split, it was back in 2020, and the stock price was nearing around $2,100 per share. Let's just say 2,000 for simplicity. They initialed a 5 for 1, and this was exactly on August 31st of 2020. I remember that. And the stock went from $2,000 per share all the way down to $400 per share. And then 2 years later, on 18th August of 2022, Tesla did another stock split of 3 for 1. And that's where we are now. So if you guys want to see what Tesla stock price is without all these stock prices, multiply it now at the current price of 15, and you'll get almost $7,000 per share, which is insane. But the stock split has not stopped. It hasn't ended there. We're going to get another stock split soon. How soon and at what price and how they're going to do it? We're going to get down to it right now. Here is my stock split chart that goes based on fundamentals of the company. And you guys can see the bots is in it. The energy is in it. The Robotaxis are in it. Autos and services are in it. Leasing is in it. Now you guys may say, Pejjy, I've been watching your videos for some time and I've seen you make these charts, a lot of these charts. But FSD global revenue is not here. Usually you put it here. Well, in this model, I did something different. You see, right now, Tesla is not reporting how much their FSD is making, whether if it's on a subscription based or the one-time fee of $8,000. Instead, what Tesla is doing is that they're adding that onto their average selling price, even today. They are doing that, I think, by end of this year or sometime next year, they will segregate this because it's going to become a much bigger business. But the FSD, whether if it's subscription or one-time fee, that's added on to the average selling price. So as you guys can see, I have the average selling price a little higher than usual because that has been included. Now, of course, Robotaxi is different because Robotaxi, there's the base fare, there's the cost per mile, there's, created expenses, all that kind of stuff. So that has a different modeling out, and you guys can check this video out on how I model that out. But in this model, we're not going to be adding the FSD global revenue. That's already added in the average selling price. And you guys can see it there. Average selling price in the thousands plus FSD. Another thing that you guys may have noticed here is that Pejjy, in your Tesla retirement model, you had a realistic case of 9 million vehicles being delivered by 2030, not almost 5.7 million. What happened? Why is that drastically reduced? If you guys know me, I'm a conservative guy. So in this model, I took things even more conservative. Simple as that. And even with that, we get some insane numbers. And it's crazy. It's crazy. So let me explain to you guys this chart so we all understand how I got these numbers and why they're justifiable and why I think, in my opinion, are very realistic. Regulatory credits, we can see it. I think this is a business that will probably be high for Tesla. I think they could probably sell a lot of these credits because the legacy automakers are scaling back on their EVs, which is just stupid. And they need to buy more credits for someone like Tesla so they can hit that quota that they need to do. Tesla's going to be selling a lot of credits. That's what I'm trying to say here. But nonetheless, every single year, I've been bringing it down all the way to 2032 because I do think eventually this thing will go away because hopefully, the legacy automakers have gone EV and they don't need to do credits anymore. which I doubt, but let's see. Services and other revenues, I did tone it down a notch a little bit, but I do think these are conservative numbers as well, and we're going based on 7 to 8% gross profits. Leasing revenue does increase over time because I do expect interest rates to continue to going down, and the affordable model is out, so that's going to be easier to lease. So I think this is realistic. I think I'm sandbagging this too, but keeping it conservative. Now the margins here, I gotta do some explaining to do here because you guys can see from 2026 and onwards, the numbers are getting crazy. In fact, by 2030, we have 26% vehicle gross profits, and we have 2032, almost 30% vehicle gross profits, which is insane because just last year we had an average of only 14.7. And I do think this year we're probably gonna end the year around 16%. Because the recording of this video, Q3 is about to come out, and we're probably going to get over 500,000 vehicles being produced, and that's going to really help economy of scale and help with the vehicle gross profit margins. Big time. And going forward, as we can see, 2026, 2 million vehicles being delivered, and then 2.5 to 3.1. Of course, that will also help bring down COGS and increase vehicle gross profits, as well as the most important thing is the thing that's being slapped onto this, which is the FSD. You guys can see in 2026, 2 million vehicles being delivered, 15% of them sells with FSD, around 300,000 of them. And of course, I did the math, 300,000 being sold with the price, with the average selling price, with the additional $8,000 of the FSD. And I kept that $8,000 for the entire decade going forward, all the way to 2032. Even though I do think that once we reach scaling of Robotaxi, I do think Tesla's going to worry off the one-time fee and just focus on the monthly subscription. I think that's smarter too. But in this case, just keeping it at $8,000 for the FSD supervised subscription fee. Not subscription, just a one-time fee. It's just easier to calculate in this model. So the interesting thing here is that the 300,000 vehicles being sold with FSD has a margin of 35%, while the majority, 85%, around 1.7 million vehicles, has just selling normal cars, is 16.5% gross profits because they're just selling the vehicles. Overall, that comes down to a 19% margin. So that's how I did it. If you go to 2027, I'm saying 20% of all vehicles being sold will be selling with FSD, one-time fee of 8,000, which is 500,000. And the margins, you can see this as well, 35%, 17%. Again, vehicle gross profits is going up to 17%, just selling the vehicle, not including the FSD. Just 17% is the vehicle gross profits. 35% is the vehicle gross profits and the FSD, which will average around 21%. And 2028, same thing, but this continues to go higher. 25% sales with FSD, nearing almost 800,000 vehicles being sold, because at this time, we're going to have a lot of robotaxis, full self-driving. I mean, version 14 is coming out this month, man. I mean, Elon was talking about this, going to come out next week at the recording of this flipping video, which is a sheesh moment. By the time this video is out and you guys watching, version 14 is already out, and you guys can already see the big flipping reviews that's on it. It's a sheesh moment. And by then, if FSD is good as how we think it's going to be good, why wouldn't all Teslas just sell with FSD? Right? So I think it's not going to be 25% by 2020. I think it's going to be closer or higher, over 50%, but keeping it conservative. Average vehicle gross profits gets increased to 18%, meaning those vehicles that get sold with FSD, their margin gets increased to 40%. And if you get the average, that's 23%, 2029, 30% sells with FSD, over 1 million vehicles, 1.2 million vehicles get sold with FSD with the margins of 40%, and the rest 70% gets sold with 18.5% because it's without FSD. 2030, 35%, almost 2 million vehicles get sold with FSD. Again, margins are 40%, but vehicle gross profits are closer to 19% because COGS are going lower. 2031 is 40% with FSD, nearing almost 3 million. Margins of about 40%, and vehicle gross profits 19.5%. And the last year, 2032, 45%, and I think this should be close to 100% to be honest with you guys, but let's just say 45%. Almost 4 million vehicles get sold with FSD, 40% margins on those, and 20% margin on the vehicle gross profits, just the vehicles, averaging almost 30%, which is a sheesh moment. We have Robotaxi here. I'm thinking that in 2026, next year, Tesla's going to have 100,000 robotaxis on the road, and this is the number that we're going to get, 4.5 billion in revenue and almost 1.5 billion in profit. The next year, 250,000 robotaxis on the road, 11 billion in revenue. In 2028, 500,000 robotaxis on the road. 2029, 750,000 vehicles on the road. 2030, 1 million robotaxis on the road. I think this is going to happen sooner than we think, but 2030, 1 million on the road, almost $46 billion in revenue and nearly 17 billion in profits, which is just insane. 2031, 2 million, the numbers pretty much double. And 2032, that doubles again, and nearly $200 billion in just revenue and nearly 73 billion in profits. That's insane. The bot Elon's talking about, he'd be surprised if they're not making 100,000 bots a month by 2030. Essentially 1.2 million robots. I'm saying 1 million bots by 2030. But in 2026, Elon did say that they want to produce 50,000 bots. So if they produce 50,000 bots, I'm thinking that's going to be an average price of 50,000. And if they do sell it, maybe there's a 10% margin. I don't know. 2027, Tesla will probably triple the output to 150,000 bots at an average price of 40,000. That brings the profits down to maybe 20%. 2028, 300,000 bots being sold at $35,000 each at a gross profits of 30%. 2029, 600,000 bots being produced and sold, $30,000 at the average selling price, with a 40% margin on that. And then 2030, 1 million bots being sold at $25,000 each, making 25 billion in revenue, 50% margins on that. 2031, 2 million bots doubling from 2030, 50% margin same. And then 2032, doubling from that to 4 million bots as well, of $20,000 each, and doubling the profits from 2031. So I think the bots could play out like this, but we will see. The energy, you guys can see, I do think that will probably end off this year around 13.5, 14 billion in revenue, and then nearly 4 billion in profits, which is nearly almost a double from 2024. And then 2026, I think 20 billion. And then 2027, 28, 38, 47, 56, 65, 74 billion, around the 28% gross profit margins. And I think I'm lowballing this too. I think energy is going to be much bigger than we think, because we have the third megapack factory coming in Houston, and that's 50 gigawatt hours. And the one in Shanghai can double the output to 8 gigawatt hours, and Lathrop was at full capacity of 40. And they're moving pretty fast with this thing. So I wouldn't bet against it. That's what I'm trying to say. Right, so that's energy. Operating costs, of course, that gets increased as we keep going. Taxes get increased as well. Other income includes interest. I kept that at 1.8 billion throughout every single year, because that's really hard to guess what they're going to do with the money. Maybe they're going to put it at a high yield bond or something. So I just kept it at 1.8 billion throughout every year. Revenue, you can see finally next year, or this year in 2025, we can see the revenue hitting over $101 billion if all these numbers happen. And 2026 is 124 billion. And then it keeps going all the way to 2030, almost 366 billion or 367 billion. I think they can do more than that if they sell more cars, of course. If they sell the 9 million cars that I think that they may sell, this could be $500 billion in revenue, which is insane. And then it goes to 2032 of almost 700 billion. But just look at the margins, guys, operating margins. 2025, 7.1%. It actually may be more, but depending on how things go in Q4 and Q3. But look at the margin rapidly increase from 2026, from 10.3 all the way to nearly 30%. That is insane. And the profits are insane too. Pretty much we got a flat year from 2024 to 2025. By 2026, we got a near doubling, like I would say 70-80% growth, and then nearly 50% growth, and then almost a 40% growth, and then 30% growth, and then it keeps going high. And then look at that, by 2030 it's 72 billion in net income gap, and then 2032 it's almost 200 billion. Like, that's the power of Robotaxi, the bot, and energy when they all come together. The compounding compounds with Tesla. It's insane, and we are not ready for it. And I would say the majority of this bulk does come from robotaxis, but I think I'm underlying the bot as well. If I am, the numbers are going to be even crazier than that, which is insane. You guys can see the EPS, right? Some analysts are calling the EPS for it to be non-GAAP of $15 by 2030. We get that by 2029. But look how fast that gets wrapped. That rapidly goes up to $52 by 2032. Like, this is the power of Tesla, holding Tesla long term. It's this stuff, which is insane. Once it grows, it grows. Once it compounds, it compounds. That's why it's very important to be a long-term investor, because once the robotaxis start to mass scale in ways that we never think is going to mass scale, or how we think it's going to mass scale, I'm so excited. Man, just get ready for the profits and revenue coming in. Same thing with the bots and the energy. Energy, we're kind of seeing it now, but that's going to have much more of a ripple effect and such. But sheesh, So we get all these numbers. Time to see what the stock price will be and what the stock split will be. But before we do that, let's go through some stock split rules because I think this is very important. We get an idea on what Tesla thinks is the time to do a stock split. And based on those, I don't want to say requirements, but kind of like a guide, you could say, right? So the first stock split that they did, the stock reached 2,000 and they of course had to do a stock split then, and they didn't do a 10 for 1, they did a 5 for 1, which the stock price came to 400. The second time they did a stock split was when the stock reached pretty much $900 2 years later, and they did a 3 for 1 and the stock price went down to high 200s, low 300s, around there. So the next time Tesla's gonna do a stock split, it's for sure when the stock reaches around the 1,000 mark, between 800 to 1,200. So we'll keep that in mind, and I do think if it goes around those prices, Tesla will probably do a 5 for 1 at those prices once again. Because here's the thing, right now, the shares outstanding for Tesla is about 3.5 billion. If they do a 5 for 1, the shares outstanding goes to almost 18 billion. That's a lot of shares outstanding. And the next stock split that they'll do is probably going to be in the high triple digits, maybe 700, 800, maybe 3 for 1 or 4 for 1 then, because again, 17.5 billion in shares outstanding. That's a lot of shares outstanding. And every time where they do a stock split, the next stock split is going to be much sooner than the previous stock split. Think Apple. Apple, they did a stock split when it was in the thousands, I remember, and now they're doing stock splits when the stock reaches around 600. Based on this, we can make a rule that if the first stock split, the third stock split here, is when the stock reaches between anywhere between 800 to 1,200, and the fourth stock split will be between 600 to, let's say, 1,000. In these ranges. So knowing that, let's get the stock prices every single year and let's see when the next stock split will happen. So let's go. Right now in 2025, if we look at Tesla's stock price, it's over 250 PE, which is insane. And I don't think Q3 and Q4 will be strong enough to justify this. So I do expect the PE to be higher end of this year. And I'm thinking 275. Why? Because my price target is 575 end of this year, and I do think we're going to hit that. And I think that is appropriate, which is a valuation of almost 1.9 trillion. Because here's the thing, guys. Analysts now, and I made a video about it, you guys can watch here. Analysts are now looking more of the catalysts and the fundamentals, or the financials of it, which is flippin' hilarious because that's what we've been talking about on this channel a lot. There's so many catalysts on Tesla that in the future, I mean, we see the numbers. If we look 2031, 2030, we can see how crazy the numbers get, especially with the Robotaxi and the bot and the energy. This is it. This is what we are invested in, not for next year and the year after that. But it looks like Wall Street is looking the way how we're looking at it. And the fact that Elon bought $1 billion worth of Tesla stock, and there's Elon's compensation package that can bring into 8.5 trillion to get his 1 trillion compensation need, that has a lot of good positive effects. And I do think we're here in the 400s unless there's a big market correction or a black swan event or a market crash. I think we are here to solidify for some time. And I do think by the end of this year, we're going to hit 575. So that's why I have 275 PE here. And again, they're forward looking. Analysts are looking at catalysts. And what's a year from end of 2025? It's end of 2026. And Elon's talking about Robotaxi to have a significant impact in the financials from 2026. And we have the numbers here as well. So that's what I'm saying. 275, 575 end of this year. That makes sense for the stock price. Of course, there's no stock split this year happening whatsoever. 2026, in the revenue, we have an increase of 22%. In the margins, we have a 50% growth. And the same thing in the net income gap, 50% growth as well. And of course, I'm expecting good guidance. End of 2026, these are the numbers. So they're looking to 2027. I could see Tesla's PE being around in the mid 200s or 200s, right? Best case scenario, 300, which I don't think that's going to happen, which the 300 PE is over $1,000 per share. I don't think that's going to happen next year. Maybe it will. I don't know. But looking at this, that's insane. At the lowest PE of 200, of 682. I'm saying in the middle of 250. That's a stock price of $852 per share. And that's a market cap over 2.7 trillion.
Oh my God, Pejjy, you're still giving Tesla PE of 250 in 2026? This doesn't make any sense. You're delusional, man.
Look, this is Tesla stock. it could go as high as 1,000 PE. I'm just saying. On X, I wrote that be prepared to see Tesla stock's PE to be as high in the triple digits. Because Tesla has been there before. Tesla did hit a PE of 2,000 once the market realizes that, oh shoot, look at this. And you know what's crazy here, guys? It's not even that crazy, because if you look at Nvidia right now, Nvidia is trading or a market cap almost 5 trillion, and they have a PE of 50. Just 2 years ago, when they were at a 1.4 trillion, kind of what similar Tesla is in now, they had a PE as high as like 400, 500, I think. Palantir had a PE of almost 700. So these growth companies, when there's a potential, investors are willing to pay because they see that, man, the future earnings are going to really bring down the PE. And in hindsight, it was just a great buy opportunity. And again, none of this is financial advice. This is just an estimation. This is not facts, just a prediction, but I think we could see that. So $852 per share. Would Tesla do a stock split in 2026? Maybe. And again, we get $852 per share by end of 2026 when we have all these numbers in. A lot of people are saying 2026 could be the next stock split, but I'm going to say, nah, it's going to be the year after that when we have revenue increasing another 20-30%, operating margin growing 30%, and profits also growing 30% as well. I'm thinking a PE of 225, maybe even 200, around there. I'm going to say 225 because I think, the bots are online, the Robotaxis is online, the energy is growing fast, interest rates are low, unless there's no World War III happening or anything, or China doesn't invade Taiwan, or I don't know, right? If things are on point and things are on track, maybe a higher PE is impossible, but at 225 PE, that's a stock price of $12.16 and a market cap almost 4 trillion. This is where I think Tesla's going to do a stock split, and I think a 5-for-1 is possible. So if we do a 5-for-1, that is a stock price of almost $245 per share. And I think that's reasonable. I think that's doable. I think this will actually happen. I do think that Tesla will initiate the third stock split by 2027. It could be early 2027 or mid 2027, but I don't think at the end of 2027. I think if we're going to hit 852 by end of 2026 and 1216 by end of 2027, that's $1,000 per share in between. So I think somewhere between then, a 5-for-1 makes sense, and I do believe that. 2028, I think a PE of 175 makes sense. It looks like the earnings will be justifying it. Maybe this could go even lower, but 175, that's a stock price of $15.18, market cap of almost 5 trillion. Stock price after this 5-for-1 stock split is $303.69, which is hilarious. 2029, 150 PE, $2,000 per share, over 6.7 trillion in market cap. After the stock split of 5-for-1, almost $410 per share. 2030, 125 PE, $2,500 per share, market cap of almost 8.2 trillion, stock price of over $500 per share. 2031, PE of 100, could go lower, but a PE of 100, that's a stock price of 31.68 and a market cap over 10 trillion, or a stock split after the stock split of 5-for-1, 633. Will Tesla initiate the fourth stock split in 2031 or 2030? That is a very good question. Again, I think $600 and above. I think that's when Tesla's going to do the fourth stock split, but I'm not going to say it here. I'm going to go to 2032, a PE of 75, stock price of almost 4,000. Of course, pre-split. After split is almost $800 per share and a market cap of almost 13 trillion. I think here Tesla will really think about doing the next stock split. And I think the next stock split would be potentially maybe a 4-for-1, maybe even a 3-for-1, but I think a 4-for-1 would make sense, which would stock price would be around the $200 per share. But this is way too far in the future and hard to guess. I mean, the fourth stock split could happen maybe 2029, 2030 if the PEs are higher. For example, if we go to 175 for 2030, I think a stock price at $700 after a split by 2030 would initiate the next stock split. But again, I'm a conservative guy, so I'm going to keep it like that. But it's hard to guess from now until end of this decade and 2032 when is the fourth stock split. We're talking about the next stock split, and the next stock split looks very reasonable that it could happen by 2027. Now, I don't know if it's going to be a 5-for-1. I don't know if it's going to be a 10-for-1. It all depends what Tesla thinks on how fast they're growing. If they really think that they're going to be going much faster than I'm putting here, and this is pretty fast. This is insane growth. But if they think the multiple is going to be much more than this, then they could probably do a higher stock split, maybe a 10-for-1, because they know they got to keep doing it every 2-3 years. Instead, they'll do it every 5-6 years. Look at Amazon. They did a 20-for-1 from 2000 to what it is now, and Chipotle did a 50-for-1. So maybe Tesla may do a 10-for-1 by 2027, but I'm putting here 5-for-1 based on historic data, because Tesla likes to be trading in the 200s for some reason. They love that. So that's what I think is going to happen. The third stock split, I think, is going to happen by 2027. But of course, this is all just speculation and prediction. Well, not that much of a speculation. I mean, these numbers I think look reasonable and they are conservative. So I do think this has over a 90% chance of happening. You guys can put me on the record. I think by 2027, we'll see the third stock split, which is flipping exciting. That means, will we see Tesla stock over $1,000 per share within the next 18 to 24 months? Perhaps. And some of you guys will be asking that, Page, is the 852 a foreshadow of your next year's price target? Because it looks like I'm going to be right the third year straight with my 575. But no, it's not a foreshadow, but I'm not saying anything. I've got to see how Q3 ends and what Q4 is going to be for me to see what 2026 is going to be. Nonetheless, these are fun. These are fun, making yearly price projections and targets. These are a lot of fun, but we are long-term investors. Comment down below. I want to know what you guys think the next stock split is going to be and at what stock price. Very interested to know. But again, guys, we are long-term investors. 2032, me and Sir are talking about 2035. Check the video out here. You won't be disappointed. A lot of great information. He even add things that I don't even have here, like Bitcoin and just, semi is separate, and just it was an amazing forecast, and I recommend you guys to watch that and take some notes or with a bag of popcorn, because numbers get nutty. Numbers get extremely nutty. Very nutty. Enjoy, guys. Subscribe, guys. Become a channel member, and I shall see you guys in the next video. Let's go!